Hello and welcome to my morning report analysis videos on Tuesday 10th of July with me, Richard Perry, market analyst at Hantec Markets. We've got a lot of sterling risk that is chopping around the markets at the moment. We had this political fallout from the UK cabinet. You had two resignations of key ministers, the Minister for Brexit, David Davis, and the Foreign Minister, Boris Johnson, both quitting yesterday amid Theresa May's Brexit plans. Casting her position as Prime Minister into doubt. It seems as though that at the moment she is fairly stable. There's no immediate threat to her premiership yet. However, it is interesting that we are seeing a lot of we saw some selling pressure coming through yesterday, but the market stabled a bit today on sterling and is actually trading higher today against the dollar and also the euro. So this move came yesterday and was accompanied by a little bit of a rebound in the dollar as well. Now the interesting fact is the dollar is now trading once more around that sort of breakdown level, 94 sort of 17, 94.20 area, 94.20 being an old pivot as well on the trade weighted dollar index. So we're around there again now. So this little sort of crossroads that we've come to on the dollar is interesting. But generally speaking, what we're seeing is a little bit of sterling rebound today. Looked initially as though sterling was under pressure. It was sort of trading about 30 pips down, but it's actually now trading about 20-30 pips up. So a little bit of a bounce into the European session today. But other than that, you've not really seen anything really. Little bit of yen weakness amidst sort of stable, I suppose, stable risk sentiment. And as the dollar has rebounded, that's dragged gold back lower. It was above 12.60 yesterday, 12.65 the high, before turning back lower about $10. Interesting that it failed to close above the resistance. Equity markets were positive yesterday, but just sort of consolidating a touch, despite the fact that we had gains on Wall Street and the futures are mildly higher. And also we've got Asian markets pulling stronger as well today. But as I said, dollar moves very limited really today. So pretty much sterling related is the focus today. Now what we have seen is the in terms of the economic data, we're looking out for GDP for the UK. Now, this is an interesting one. This is monthly GDP, and this would be the first reading of monthly GDP that we're going to get from the ONS, which is the Stats Office in the UK. There's no forecast that I've seen for the monthly GDP, so it'd be interesting to see what the ONS give today. UK industrial production at 9:30 expected to improve slightly to 1.9%. Where is it? It is there, from 1.8%, and then German ZEW again expected to deteriorate to -18. Now that is not all that great if that is to be seen. And then jobs openings for the US on the JOLTS at 3 o'clock expected to be 6.58, down from 670. So my chart of the day is silver. Now what we have seen is silver and gold sort of threatening a recovery. And it's interesting that 1616, I spoke about this previously as a key floor. It's sort of broken a couple of times in March and May, but generally speaking 1616 has been a key breakdown level. It broke down a couple of weeks ago, found a support at 1573. But then it's interesting that 1616 has been a resistance. That old support has turned into resistance as the market is sort of testing higher, potentially testing a possible head and shoulders bottom pattern. Now you can see this on the hourly chart, this head and shoulders, inverted head and shoulders pattern actually completed on an intraday basis before just retreating back again. And it's interesting that the market is sort of holding up around sort of 16 figure to 1605, 1610, which is sort of a basis of support. Now the market on the RSI on the hourly is back towards 40, which is around about where the market has been sort of finding support throughout the recovery. Also the MACD lines are around neutral. as well. So this is a point at which the market is going to really test. If it starts to break down below 16 figure, which was yesterday's low, then that would be a bit of a blow, certainly for the recovery prospects. But 1588 is that key reaction low of the higher low, and if that continues to hold, then the prospect of a recovery is still on. But what you do have on these indicators is a momentum improvement still on the daily chart, with the MACD lines starting to sort of bottom out. Stochastics are rising, RSI above 40. I mean, this recovery has been a bit stunted by today's move, and if it breaks back below 16 figure again, as I said, that would be a bit of a disappointment. But for now, that level is holding. So 1616 is the level of resistance. If you see a closing break above that, that really does open for a recovery. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.